Our next speaker, Dr. Anthony Das, is the Group Chief Economist and Head of AmBank Research. He has been with AmBank Group since June 2013. Dr. Anthony started his career in Bank Negara and has over 30 years of experience in both public sector and private sector. With his impressive credentials, he is currently seconded to the government and is a member of both the Economic Planning Unit and Economic Action Council. Dr. Anthony is also the advisory panel of Majlis Pembangunan Ekonomi Malaysia, MAPM, and is involved in the special project for the United Nations under the United Nations Development Programme for the Government of United Arab Emirates. And with that, I shall hand over the session to you, Dr. Anthony. It seems like we can't hear Dr. Anthony. Probably we are fixing the speaker problem at the moment. Please bear with us as we try and get...
All right. Can you hear me now, please?
Yes.
Loud and clear.
Loud and clear, Dr. Anthony.
Right. Good morning and thank you very much. And first and foremost, we are coming to the tail end of 2020. And much of 2020, we have been focusing a lot on the US election in particular. But I felt that the real crux and the important area that we should focus on is more on the Malaysian side. Now, before I get into that part here, if we just move to the next slide. In fact, when I first looked at 2020 way back last year itself, the first half of last year, can we move to the next slide, please? Okay. If you look at the when I was looking at last year projecting for 2020, the first half of 2019, I was looking at more of a recession in 2020, global recession. But somehow rather, that's because of the trade war issue, Brexit and geopolitical tension, but things started changing in the second half. And therefore, my view is that this year, yes, the global business will improve moderately, but generally it's going to be a half full kind of economy. And so that was the situation. However, when we started off this year, we started off with the US-Iran kind of tension. And then from that, it's all everywhere today, we only speak about one mega issue, that is the COVID issue. And if you look at the local domestic side, at the end of February, early March, we started seeing the domestic political challenges because we had a change of government. So net of effect, as a result of the whole COVID pandemic situation here, what happened here is that we all know there was a simultaneous disruption in the global supply chain, affected all businesses. Almost immediately, the restrictive measures, that is the lockdown and the MCO, that one crippled the demand. And as a result, almost instantly, we started seeing job losses. So within 3 weeks, from a situation of painting a kind of moderate growth outlook, within 3 weeks, when we declared the pandemic, March 11, the whole world got into a recession. Now, if you move to the next slide, please. And if you look at Malaysia, Malaysia is no scratch proof from this entire environment. You must remember we are very much a trading nation. We still depend a lot on exports. Likewise, we first started off saying that this year the economy should be improving a bit more better, but somehow or other, the headwinds from the first quarter of the external environment and the domestic challenges caused the economy to really plunge. And we are looking at a kind of quite a strong negative growth for this year. But the key thing here is that the risk on the country, the risk profiling on the country has changed compared to the 1985 recession, 97 or 2009. And today, our political risk is at the highest, economic risk is at the highest, financial risk is still at the medium level, or what we call it as moderate. Now, this was not so during the time of 1985 recession. That was driven by commodity prices that collapsed. 97 was the Asian financial crisis, and 2009 was driven by the global financial crisis. And if we move to the next slide, please. However, when we first started looking at this whole COVID pandemic scenario, many felt that the global business is going to be worse off compared to the 1930s Great Depression. And we were looking at two situations, the way I was looking at it. One is a systemic fear and the other one is the cyclical fear. And if you look at the systemic fear, there was this kind of risk or concern where the sovereign defaults will pick up. There could be a banking crisis coming into the picture and prices just collapsing all the way down. Then on the cyclical side was, okay, the pickup in the unemployment rate, will this stay on long and businesses going down? Not just businesses, we are talking about bankruptcies, not just coming from businesses, but also from consumer, and what's going to happen to the property market. And in the case of Malaysia, added with the domestic political situation, would there be a huge outflow of funds potentially? However, the good part is that the lesson learned from the 2009 situation, the policymakers and the businesses in general, they responded relatively fast with all these fiscal stimulus measures and monetary measures. So that has actually somewhat helped contain, and the impact from all those policy measures, we saw the third quarter GDP, not just Malaysia, but globally, everyone started improving. But one thing you must remember is that this crisis actually highlighted the importance of the structural reforms. This is something that Malaysia has been sitting on it for a very long time. If you move to the next slide, please. And if you look at the response of Malaysian side here, yes, we came out with 305 billion worth in terms of injection, but bear in mind that 55 billion is only coming from the government. All the others is coming from the other areas of the monetary measures and so on. So as a result of these measures, we saw the third quarter actually improve, not just because of these measures. The economy also improved because globally and also Malaysia, the restrictive measures of lockdown and MCOs were relaxed. So we started seeing businesses coming back. To some extent, we started seeing the backlog orders. They were trying to clear the backlog orders. There was a bit of new orders coming in, both from the domestic and the export side. And on the top of that, what happened is there was also pent-up demand from the consumer side here. There was a bit of postponement. But the real challenge is going to be fourth quarter. If we move to the next slide, please. And if you look at the next slide, the challenge now is on the fourth quarter. That's because, again, the number of cases has picked up. And now we have the CMCO. On the top of that, the political environment is becoming quite uncertain. With all the situation around us, what is happening now, the general feedback that I've been getting is that orders have been coming down. Backlog orders have almost like depleted. New orders are actually very weak. And so effectively, the manufacturing side is showing some signs of slowing down. And consumers could also be delaying their sense of postponement of their consumption. And if you look at the next slide, please. So these are very good numbers that I like to use, because in most times politicians do not understand how to interpret these numbers, but these are numbers actually reflecting the SME segment here. Anything below the 50 line clearly shows it's a contraction. And we can see from here the total orders, new orders, export orders, and backlog, all of them are actually losing momentum. So now the question here is, how much longer will this take place? So that is the biggest challenge that we are going to face, in the sense that it all depends how long the CMCO is going to last. If the CMCO continues to stay put for a longer period, then the impact to the manufacturing or the business economic activities, not just manufacturing, even services, could take a bit of a knock-on effect here. So if the CMCO ends by end of this year, then the momentum should pick up in the first quarter. But what happens if the number of cases continue and right into first quarter, and where we have the Chinese New Year festive season coming in? If it drags into the first quarter, then we are going to talk about a further dip, or the recovery of the business sentiment is going to be very slow. And if you move to the next slide, what happens is that if you talk about the budget, okay? If you talk about the budget, yes, it's a very expansionary budget, focusing on lives and livelihood and business continuity. Also, it's trying to set tone for the 12 MP, because the 12 MP is supposed to be announced very much in the early part of January next year. But now the challenge on the budget would be is that if you move to the next slide, the good thing about this budget is that it is kind of not focusing on trying to balance the budget deficit, but more so we are talking about spending our way through. So the deficit is at about 6% for this year. Next year, the government is looking at about 5.4% kind of deficit. While the focus is on health and livelihoods, but what is really important is the emphasis on construction infra, because this segment gives actually a huge multiplier in terms of the forward side and the backward. Backward linkage means all those businesses relating to the construction infra would benefit. Forward is from this construction infra, then you drive business activities to other areas of non-construction infra related situation. And the interesting thing about this construction infra that we are seeing here is that it's basically the rollover of the projects that has been announced in the previous budget itself. But whatever said, if the implementation is fast, then it should stimulate the economy as early as 2021. It all depends when the implementation is going to come. And along that line is also that the pandemic has actually expedited the digitalization and automation. This is nothing new. It has been there, but it's only that the use of the importance of digitalization and automation has come back into the picture. And also when we talk about sustainability, today, if you look at the whole situation, businesses, not just Malaysia, but globally, we are focusing increasingly on ESG, environment, social, and governance. But more importantly, now there's a new element that has been added that is actually the health. Now, if you go to the next slide, the real challenge in this budget is, okay, there are a few challenges here. First one is whether the growth target of 6.5 to 7.5 is over-optimistic. And what happens if the pandemic continues into first quarter of 2021? Would that mean that the budget, the economic growth will be shortchanged? We may not be able to hit the 6.5, 7.5. And if all that happens, added with, say, there's a delay or failure in the vaccine to come out, or even if there's a vaccine, the acceptability of the vaccine and how well it can reach this part of the world, these are all the what-if questions come into the picture. And it doesn't mean that if you have the vaccine tomorrow, the day after, there's no more COVID cases. So the COVID cases could still continue for the rest of next year also, only that maybe the number of cases would not be increasing at an exponential rate, probably decreasing or first increase and then gradually decrease. So in all this kind of what-if situations setting, is the current budget allocated for 2021 sufficient? And if it's not sufficient, would there be a supplementary budget? If there is a supplementary budget, can we afford to have another supplementary budget? So these are the what-if situation that comes in. Second part is also that the domestic political issues that's coming to the picture. We know that today, tomorrow should be the voting part, but now there are also storylines going on that it could be postponed to December 1st. So in whichever way here, the political noise is actually going to supersede to a large extent of this implementation of the budget here. And therefore, we got to be a bit mindful on the rating agencies. Next year, they'll be looking at us, and not just S&P and Fitch, but also we got to be quite mindful about the FTSE Russell, okay? Global Bond Index, where they will be coming back to review us sometime in the second quarter of next year. Now, if you move to the next slide, in the sense of the RCEP. Now, RCEP, okay, the good thing about this RCEP that we have got in is that, yes, the RCEP that we just signed, okay, they account for about 1/3 of global GDP and 50% of the world population. Already, we are exposed to these member countries of RCEP in terms of trades, about 60%. In terms of exports, it's about 55, 56%. And among the top 10 ASEAN trading partners, we are already there about 58%. So the best way that Malaysia will benefit is that through better market access, lower transaction costs. We expect increased business opportunities through partnership and commercialization. And we also hope that there could be more foreign investments that can come in and then support the local business. And also we hope that local companies can actually go and tap into the global value chain. So when I calculated the contribution of this RCEP, it should kind of give a bit of a lift to the global, our GDP between 0.8 to 1.7 and exports about 24-25%. And if you look at the next slide, so the next slide actually tells you these are the areas of businesses that I see that should benefit from the RCEP. First thing is the tourism related, consumer, manufacturing side, and then telecommunication right up to consultancy, and the whole range of from F&B right up to machinery equipments, all these through better access. And we also expect SMEs to gain momentum. However, you got to be a bit mindful about this. While there will be winners from this RCEP situation in the case of Malaysia, the concern is also on there will be losers, especially in the areas of textiles and wearing apparels, timber and timber products, due to the stiff competition that's going to come into the picture. And also, following this market liberalization, my concern is also that some of the domestic sectors and the SMEs, they may not be able to compete that well because of the standards, the quality, the cost of productions, and etc. here. So as a result of this, for companies who want to survive going forward, there is an urgent need for digitalization, automation, and innovation. And when we talk about all these things, then comes back to our labor force here. What kind of labor force do we have? Our future labor force, can they support all these things? So these are the what ifs out there that can impede some of the SMEs going forward here. And if you look at the next slide, in terms of the Biden's victory, the good thing for Malaysia is that I feel that we would be not branded as a USD manipulator, currency manipulator, as what the Trump administration did. And we should also benefit from the rest of the world in the sense that I foresee that any form of trade negotiation would be far more amicable compared to the way when under Trump's administration, it was like a shocker that comes and then he slaps 10% tariff, 20% tariff. However, the relationship between US, China, in my view, is still going to be tense, and there could be more tariffs coming into the picture. But the relationship with all other parts should actually improve. And that's with India, Japan, Korea, and Europe. ASEAN would very much depend on the US-China foreign policy because ASEAN trade with China is really huge at this point in time. In the case of Australia, yes, they will be good between US and Australia. But in the case of US and China, I don't foresee the kind of good relationship. The tense situation will still remain. Now, if we move to the next slide, please. In the case, okay, looking at the outlook, you must be a bit mindful about when you look at this kind of growth numbers, like global trade and global GDP and Malaysia's GDP exports. All these are coming from a very low base. When I say low base, you see for 2020, the kind of contraction that we are seeing. So it's a very much low base that is actually driving up this whole number game out here. If you talk about Malaysia coming back to 2019 level, I foresee the earliest can only be 2022. The latest will be 2023. Now, apart from the recovery of the global businesses and so on, and with the contribution of RCEP, the domestic climate, especially the political side, will have to settle down quickly. If that settles down well, then it is going to be a faster recovery for Malaysia to come back into 2019 level. Otherwise, there's all this risk of Malaysia falling behind the curve, whereas we could be seeing other ASEAN countries recovering faster in terms of their business activities compared to Malaysia itself. And recently, yes, we saw the huge contribution of rubber products in terms of our exports, but this is a one-off blip. But going forward, I expect the contribution of rubber to probably continue into next year, but eventually stabilize off thereafter here. And if you move to the next slide, please. In terms of the OPR outlook, my view is that following my discussion also with JK, who will be speaking after this, is that we feel that Bank Negara will remain cautious for the rest of next year. But there is a possibility for an OPR cut by 25 basis points. And very much it depends on the number of cases of COVID. Also, it depends on how the business environment is going to be, and also how the political environment is going to be. So that's the kind of situation that I'm looking at in terms of the OPR. Basically, if things really improve extremely well for the domestic economy, then the possibility for a rate cut may not be there. But however, the outlook may not be that exciting in the first quarter. If the outlook does not, if it turns out to be less exciting in the first quarter, then you could be seeing an OPR cut coming into the picture. And if you look at the next slide then, now this is basically on the currency. I'm not going to touch too much on the currency because I'm going to leave this for JK to speak on this. And generally speaking, I'm looking at a dollar weakening, and that should benefit ringgit in the near term. But on the longer term for next year, I think it's very much governed by the economic sentiments of this country, added with the political situation here. And if you move to the next slide then, please. Now, if I look at the growth drivers between now for the next 12 months, these are the areas of businesses that we see that's going to support the economy all the way through. On the manufacturing side, because last year E&E wasn't doing that well, and it has bottomed out, we expect this segment of the business to improve. Likewise, all the way down from food processing until consumer related. And if you look at the wholesale on the services side, we are really benefiting quite a lot from the logistic and warehousing, e-commerce. So these are the two areas we see huge contribution to the economic growth now, and also coming from the ICT, and also there's still a strong support coming from automation. Telecommunication should start doing well, especially if we start rolling out the 5G situation. Now, this is the biggest challenge that we have here, because from my discussion at Putrajaya, in the sense that generally all businesses are only, the argument about internet is connectivity. And there are some places you get 4G, some places 2G, some places 0G. So this is the situational play that we are in. The moment we can move in and get into the 5G rolled out fast, then we are in a better position compared to some of our neighboring peers, especially Vietnam per se. Now, on the other areas here, digitalization and automation is something that is becoming an essence here. And in the past, what happened is that the delay for digitalization and automation is largely because we had a lot of foreign workers. So cheap labor was compensating for this part here. But now, if you notice, we are increasingly focusing on digitalization and automation. And yes, we are very mindful that some of the SMEs now are still struggling in terms of cash flow. So the readiness assessment, which just now Chris Yap was talking about, the BIS race thing, which AmBank has been doing very well about it. In the sense that, yes, the readiness assessment can be a bit slow this year. We are very mindful because for anybody, 2020 is a foregone conclusion, is out, it's not even in the calendar. We are just moving to 2021, hoping 2022 will become like 2019. So if we are doing a forward positioning, the focus is very much digitalization, automation, and we also want to position Malaysia to be the solar panel, renewable energy, taking advantage of this part here. Because in ASEAN now, there is no real champion at the moment. So this is where we want to talk about sustainability of growth. ESG comes into the picture. And the other area is also on agri-modernization. And the other part is industrial properties, that is largely because of the logistic warehousing here. Now, in terms of construction, we are looking at about close to 6 months or so. All depends on when the projects are going to be rolled out. And if you move to the next slide, please. And if you look at the next slide, these are all going to be the potential growth drivers, anything more than 12 months from now, and that is from aviation to retail segment. So in a nutshell, if I were to conclude this whole thing here, yes, outlook for business outlook for next year is promising globally. And that is partly because of the easing of the lockdown and easing of the MCOs. But we have to be very mindful that at the moment, we are now experiencing the second wave of the pandemic. The first wave was actually in March, April. Now is the second wave. And you've got to be a bit mindful that we are also looking at a third wave that could come sometime first quarter next year. And if we were to benchmark or mirror it with the Spanish flu, in the Spanish flu, the second wave was worse off than the first wave. And the third wave was far more subtle. So we hope that this whole thing ends by first quarter next year. And with the vaccine coming into the picture, it should be able to control the whole scenario setting. So uptick on the global business should be good. We should be benefiting more from the export side, and domestic side will very much depend on the construction infra rollout. And if you're talking about digitalization and automation, it also depends quite a lot on one, what is the strategy that we have on the foreign workers policy, two, the rolling out of all this 5G here. And the other part that is also going to influence our potential progress is actually the political side. Even if we call for a snap election and whoever wins the next round is again back to a very slim majority, is going back to this, we are going back to square one itself. So if there is a snap election, whoever wins must have a very strong majority. So when you have a strong majority, the dust on the political side actually settles much faster. And if there was a, let's come to this budget. Now, if let's just say they push it to December 1st, and again, you go back to vote of no confidence and somebody new comes into the picture, the storyline is still the same. So the election is expected to be the solution to the problem. But again, the election can only solve the problem if there is a strong, clear, big majority. With that, I will end here and I'll pass it to my fellow colleague, JK. Thanks.